In 1959, the Kenya Oil Company was founded. Flash forward to 2009 and they rebranded as Kenol Kobil. Today, the oil marketing company has been around for close to 6 decades. My name is Maalika, Kazia, and I'm coming to you from the headquarters of Kenol Kobil in Nairobi. Joining us on the trading bell today is a General Manager Kenya for Kenol Kobil, Mr. Martin Kimani. Let's have a look at his profile. Martin Kimani is the General Manager Kenya for Kenol Kobil. Martin holds an MBA in Strategic Management from the University of Nairobi and a Bachelor's of Arts in Business Administration from Kenyatta University, among other certifications. Martin was previously the General Manager Strategy at the Kenya Pipeline Company. Before that, Martin had worked with Kenol Kobil for over 10 years, where he was charged with performing various roles, including the role of the Group Supply and Trading Manager. Martin has a wealth of experience in the oil and gas sector, including but not limited to corporate strategy, marketing, oil trading and supply optimization. We are, of course, getting into conversation with the General Manager for Kenya, Kenol Kobil, and that is Martin Kimani, who's joining us right now. Welcome, Martin.
Thank you. All
right, let's just begin this conversation with the fact that, of course, Kenol Kobil's net profit in the 6 months ended June rose 16.07%. We've also seen that, after taxation increased to 1.65 billion from 1.42 billion. And it's interesting to see that, of course, the Petroleum Institute of East Africa did give the overall indication of market share at 14.3% for Kenol Kobil for January to March trading window. So what are some of the strategic measures that you have taken as a company in order to remain at the top and, of course, to maintain these margins?
Well, you're right. We went up 16% in terms of the net profit. This is half year 2018 compared to similar period last year. We've put in a couple of strategies, and of course, like you rightfully put, our sales revenue also recorded a good growth of about 24%. Some of the measures that we've put in place, because I must tell you it was not easy, but most of our focus and the measures we've been focusing on includes growing all our segments. Kenol Kobil operates in various segments in terms of our overall business. When you talk about segment, we are talking about the retail segment. We are talking about, this is where we have our retail outlets. We have about 200 outlets in the country and about 400 in the group. Over and above retail, we are very strong in what we call the niche business segment. This is where we are strong in LPG. Our brand K-Gas is one of the strongest in terms of market share. Over and above gas, we are also strongly in the lubricants business, very strong and also registered commendable growth first half. Other segments that we are also very strong in is a segment like aviation. Mm-hmm. Aviation, we are commanding market share of about 57%. This is according to the data from PIA for that period. And again, you can see all the areas we are operating in, including export, which is also another strong segment for us. This is where we are exporting out of the country, and mainly to serve our subsidiaries and other independent customers. So you'll see, all in all, we have not just focused in one area as a company. So one of our strategies is to grow in all our segments, ensure that all our areas of business are profitable. We did that in the first half of the year, and we succeeded at it. The other aspect that has helped us achieve this commendable results that we've posted for the first half is measures and mechanisms that we put in place of managing our costs. We had very strict and strong measures to streamline the way we do our procurement, cost management strategies and all that. And this was actually one of the biggest contributors to those numbers, because we saw a drop in our admin and operation cost of up to 46%. That is not easy within 6 months. And these and a lot of other strategies are some of the key measures we've put in place that are helping us to keep registering good results.
So you've diversified, of course, is one of your key strategies, and your costs are nearly halved, I would say. Very interesting there. Now, as you talk about the environment in which you operate, you know, this year it's been a bit tumultuous for a lot of companies when it comes to petroleum products because of the 16% VAT that was initially recommended and implemented from September 1st on petroleum products. But of course, after that, we saw President Uhuru Kenyatta sign into law the finance bill that slashed it to 8% on petroleum products after the whole chant at Parliament of zeros. It was a very interesting time. I would really like to know how your company was looking at things at that point in time, if we could just flash back to that point, and what were some of the concerns you had? What was the outlook that you were hoping for?
I must say, and you're right, that come the month of September this year, we saw a lot of push and pull. Of course, there was a VAT bill that was to come into effect, where 16% was to kick off, and it did, because that was the law. Where we saw a bit of uncertainty is where we had a lot of debate, and we even saw a bit of protest on the road. Some groups were unhappy with that move, and we saw a lot of what I would say confusion.
Yes.
And that set us back as a company to see retailers, our distributors, our consumers get a bit lost in confusion. They didn't know which way it was, because if you remember, it was in the public domain that the 16% was going to be scrapped, it was going to be reduced. So there was a lot of lack of clarity. So we saw a bit of confusion, which saw the volume for or rather the demand going a bit low within the month of September. But I must say, and we are happy with what the government did. The government moved in with speed, and they were able to bring that confusion to an end. And there was a new resolution where the percentage now got to 8%. And I must say that after that, it's been stable, because now it's low. Everyone is sure of what the future is. So as a company, we were ready to supply. We had the product at all times, and all our stakeholders were on standby to continue serving the nation. And I must say today, it's in the past, and we are on the 8% VAT regime. And that's upon government. What government does, we respect, and we go by it.
All right, and as that you've shed light on that new development, now you're in a more stable position with more clarity, and everything seems to be smoother. But you do have, of course, operations across East and Central Africa, from Uganda, Rwanda, Ethiopia, Burundi, Mozambique, Zambia. So how nuanced are your policies when it comes to these different regions? And especially now that the VAT implementation in Kenya is there, are other regions looking better placed for future growth?
I must say, the impact on us as a business, because when you talk about VAT, it's what I collect on behalf of government. So I collect and I remit it to government. So to me, it's more or less like an in and out affair. So I wouldn't say that it has put us in a worse off situation. So we are not complaining about that. And I will not tell you that we now prefer to operate in other markets. We are not there yet, because this is tax. Every country that we operate in has a tax regime that governs them. So to us, we are okay. Whatever government does, we are in a healthy, well-controlled environment by government, and we are happy with that. So to us, we cannot complain. But I must mention that with the rules that were passed on the VAT, something else that came into effect is what the government called the anti-adulteration levy. This was the 18 shillings that was put on the kerosene to try and bridge the price difference between diesel or petrol, for that matter, and kerosene. Yes. Now you will remember that that difference has been there for quite some time, and in some sectors, especially with the unscrupulous traders, it was seen as an opportunity to try and make more margin by mixing kerosene with the other grades, which saw them make illegal profit, so to speak. So We saw the government move in and try to bridge that gap, because there has been a lot of outcry, especially from the countries that we export our products to, that there was a lot of adulteration in Kenya. So I think by government moving in and putting in that levy, it was in an effort to try and bridge the gap, so as not to create an incentive for these unscrupulous traders to try and fight adulteration. So that's another measure that came into being, and we hope to see positive impact in terms of the other countries that get their fuel from Kenya, preferring to lift their products from the country after fighting adulteration. And we must appreciate the efforts government is putting to try and bring sanity in the industry.
So clearly the anti-adulteration has of course helped to regulate a lot of the operations when it comes to petroleum within the country, and for that it's a good thing. It's
still too early to say. It's about 3-4 months in the game, yes. But that's our hope.
So that, because positive.
That was one of the causes for this adulteration.
Yes.
So we are hoping to see good results as we go by.
Okay, speaking of good things, of course, Kenol Kobil did launch a mobile application dubbed K-Wallet. Now, what services can customers expect from this? Have they, if they've not seen it, just, to start us off talking about K-Wallet, what is it exactly and what are some of the benefits?
K-Wallet is a mobile fuel app, which you're right, we launched early this year. And this is an application which you of course download to your phone, and you can use it to go about your fuel business, and how it works and the benefits and some of the services you enjoy from this app is, one, you're able to locate our stations countrywide. The moment you log into that app, it's able to show you where the next Kenol Kobil station is and what services you can get in that particular station and all that. So that is one of the great benefits for this app. Number two, you're able to monitor the fuel spend. We are sensitive to our customers' requirement, and mostly, especially the young people, the middle class, who are very sensitive to their spend. They want to keep a track record of how their fuel spend is. You're able to get that from the K-Wallet app. Over and above that, it comes with a discount. Every liter you fuel of any product, you're able to enjoy a 2 shillings discount. So this app comes with a discount to it. Of course, obviously, over and above the ability to have cashless transactions, which most of us would prefer today. So those are some of the benefits that you are able to derive from this app. We've seen good growth of the app in the market. The volumes that are being transacted from this app continue to grow. And we continue to perfect it because we are innovative and we keep listening to our customers. And whenever we see a chance to improve this app, to even be able to support our customers better, we are able to do that.
So clearly an exciting space when it comes to technology, innovation and growing with the times and digitizing as well. Now, finally, just as we wrap up, what message would you want to send your stakeholders, especially your customers, at this point?
Like I said, Kenol Kobil is present and strong in almost all the business segments. So may you be a reseller out there as one of our customers. We are able to meet your demands. May you be a retailer, a consumer driving into a station. We are able to meet your demand. Like I said, our retail network is huge. We have over 200 station outlets in the country. And they are not just big in number, they are also well distributed. I like saying that we are represented right from Mombasa to Lodwar. So wherever you drive in this country, you will get a Kenol Kobil station. So my assurance to our stakeholders is that we are committed to ensuring that the fuel is delivered wherever they require it all across the country in good quality. We are very fussy about quality. We can assure all our customers that whenever you drive into a Kenol Kobil station, you're assured of a quality product, because we are not only on the retail space, but I must mention that we are also very strong in what we call trading. All the trading is where we are importing product into the country on behalf of other oil marketers. We were very active last year. We imported about 22% of all the oil that landed in Kenya. And this year, we so far been able to bring 17 shipments. These are 17 cargoes of all the product, more gas, which is super petrol, gas oil or diesel, and jet fuel and kerosene. We've done 17 cargoes. The year is still going. We'll do a lot more before we close the year. And that puts us at about 24% market share. So, and this one is we are able to do this because of the good relationships we have with some of the big oil producers in the world and the big oil trading houses. They give us good support because they believe in us. They believe in our management, in our way of doing things, in our strategies. So we've enjoyed good support from them for the last few years. So I must tell our stakeholders that you can believe in us, you can believe in our brand, you can believe in us on quality, our strength, our ability to deliver 17 cargoes. It's not an easy thing. Sure. We are able to finance all these,
yes,
and make profit and stay sound. And of course, just to speak a bit, even in terms of the employment, we employ a lot of Kenyans in all the in all the offices we have in Kenya. We are in Western Kenya, we are in Mombasa, and of course in the subsidiaries in the other countries. So we are also a stable employer. We employ a lot of people. So we enjoy good relationship with all our stakeholders, and we can assure all the consumers, all the stakeholders that we can be trusted. We've been at it for almost 60 years now.
Yeah, close to 6 decades. It's been a long time. Thank you very much, Martin, for speaking to us today. Well, that was, of course, Martin Kimani, General Manager Kenya for Kenol Kobil Group, talking to us on the trading bell and shedding some light on the oil sector and many more things that Kenol Kobil is involved in. But on that note, we're going to take a short breather. We'll be right back with the market analysis.
The decline in the oil share index has been driven primarily by large cap stocks. Primarily, the top three have been Safaricom, KCB, and Equity, and this is largely due to foreigners continuing to exit the market.